Hey guys, Augustino here. Cloudy day here in Cleveland, as you can see. The other day, actually yesterday, after posting one of these videos, a buddy of mine called me up and started asking about this development thing that we do. So I'll share a little bit about that for those that might be interested in maybe doing some ground up development or doing one of these redevelopment type plays. So over my shoulder here, right there, is the Rockefeller building. John D. Rockefeller used to own that building here in Cleveland. Before he was run out of town, went to New York and did all the Rockefeller Center and most of the landmarks that many people are aware of. John D. Rockefeller started here in Cleveland. So that building is an office that we're going to be converting to multifamily. Over 400 units are going to be right there. The cool thing about that deal is that it's literally right next door to Sherwin-Williams. They're building their world headquarters. They're going to bring about 6,000 jobs right to that location, literally like the next street over, like right there, right? We're literally right next door. You'd be able to see the crane in respect to the building, but it's kind of covered up by the clouds here. But I guess the point is that the types of developments that we're doing are very, very strategic, right? When you're doing development, there's most people consider there's an inherent sense of risk associated with development, and the reason why is because you're obviously you don't know that anybody's going to move into the place. Unlike multifamily, where there's already people living there, there's an ongoing business, and might have been there for some number of years already, and it's already got a tenant base, and they're already producing cash and income and everything else like that, which we have plenty of. Development is a little different, right? Development, you don't have all that. You have to go in and build it all out. You have to pick the site, decide who's going to live there, what the demographic is, who's going to be living there, what's the avatar. Is it going to be a doctor? Is it going to be workforce housing? Is it going to be low income? I mean, it all depends, right? So what we choose to do is highly dense areas typically. That's hence the reason why we're doing Rockefeller here. This dense area, downtown area, where we did Lumos, which I think there was a couple of videos ago that I shared a little bit about that deal, right near the Cleveland Clinic. Again, Cleveland Clinic is driving a great number of jobs concentrated in that one area. So that's one of the key factors we consider, not only when we're doing multifamily, but also when we're doing development. The cool thing though, specific to Cleveland, specifically, right? This is very important. There's two major considerations that Cleveland has, this market has, over many other markets in the United States, which is the reason why we're going to be still here really developing for at least the next 12 months or so. The number one, you have this opportunity zone, right? There's a lot to opportunity zone, but the long and short of it is, let's say that you as an investor, as a limited partner, invest in a deal, couple $100,000, say $200,000, right? And you keep that money in an OZ deal, like the Rockefeller's. This is an opportunity zone. All this area right here is opportunity zone. To give you some perspective, there's a Starbucks right 3 minutes away from here. It's like 100 feet, 200 feet away from Rockefeller is a Starbucks. There was a Ruth Chris Steakhouse right across the square. So I mean, it's kind of funky to call this an opportunity zone, but anyway. If you put $200,000 into this opportunity zone deal, and in 10 years when you cash it out, all that money comes out tax free, meaning no capital gains tax. You take that money, take it out of your hands, put it into the fund, you take it out, comes back into your hands, which is very different than using some sort of self-directed IRA. That's what I'm talking about. I'm talking about actual cash, no capital gains. So that's one major aspect for the investors. The second major aspect is, this is not only for investors but also for the lenders, is this tax abatement. There's a 15-year tax abatement for deals here in Cleveland, right? So that means no taxes on the developed assets, which is huge because it boosts the net operating income, basically the net cash that's coming in on the deal. And it also pushes up the returns for the investors, everyone that's involved with the deal, including the banks, including the investors, everybody, right? So if you think about it, those two scenarios are huge. The thing is, though, getting back to that first thing, the OZ component. Most opportunity zones across the United States are in not so nice areas, right? As I pointed out a second ago here, this whole area down here is opportunity zone. Where we're building Lumos is opportunity zone. There are some sketchy parts, or there were some sketchy parts of that area, but have now been transitioning to nicer areas because of all this investment that's coming in, right? So not all areas are like this. Not all OZs are created equal. So that's why when you're selecting the type of OZ to invest in, the type of opportunity zone, type of deals that you might be considering, looking at the sponsor and everything else like that is fine. Like, guys like us that put the deals together always do that, but also considering the deal itself and what's so special about it. So, like I said, we're concentrated just in this one spot, and there's a reason for it, right? One thing I don't do is I don't jump around to different areas and try to figure out how do I make 100 units work in the middle of nowhere, Texas or whatever. Nothing wrong with Texas. I love Texas. It's just that right now it doesn't make any sense for us. We're still trying to maximize the opportunity right here, right? And we know this market very, very well. So the reason why I'm bringing all this up is because if you are thinking about investing, and really you should be, this is one of those scenarios that you can't really wait. You can't wait forever when you're thinking about investing in real estate. This is one of those plays that makes total sense to do. Certainly if you're going to put away a couple $100,000 in a deal, our deals will certainly beat the stock market. I think just about anything would beat the stock market these days anyway. But I think that the cool thing about it is that building right there, okay, that building has been there for over 100 years. When we're done with it, it's going to be there for 100 more, right? It's never going to go away. And, there's some, I can't say that about all the companies that have been on the indexes that you're probably trading on, right? That's a real key factor when you're looking at and considering where to put your cash, and that's why real estate makes sense, at least to me anyway. Anyway, I just wanted to throw that message out there about opportunity zones and of course this whole tax abatement scenario. If you have any questions about it, of course, comment. Happy to respond. But again, investing in real estate, whether it's with my team or anyone else for that matter, something you need to be considering as part of your portfolio, in my opinion. The way that we're printing money into oblivion, you need to put it into a hard physical asset that's going to be around for the long term. Anyway, thanks for tuning in, and I'll see you tomorrow. Bye.